Good having you, Mr. Prasad. Thanks for joining in. And start off with that, Srikakulam. When could this be resolved? As Dr. Reddy's has not gotten the approval in the US for more than 8 months now.
So we continue to do the remediation actions that we committed. We've completed almost all of them. And we are engaged with the FDA, but we don't have an update on what the way forward is.
Okay, but has the company done the tech transfer for the current approved products, notably Vidasa and Acogen from the Srikakulam plant?
Some products we are doing. A couple of products we've already completed, and some of the others we are in the process of doing so. But as a abundant precaution, we are doing it. No major update on any of those products today.
Right, Mr. Prasad, are most of your expected launches in FY16 filed from non-Srikakulam based sources?
A large portion of the products going forward are from the Srikakulam plant, but we are also filing from our SEZ in Vizag now. So going forward, the reliance on SCTO, the Srikakulam plant will be less. But right now, a significant number of products are tied to CTOs, to the Srikakulam plant.
Okay, thanks for that clarification. The second concern is Venezuela. Given that forex reserves of the country are fast getting depleted, do you see a scenario of write-offs? And what is the net monetary assets pending translation out of Venezuela?
So we have about $50+ million that need to come from Venezuela. We are getting some money. In the last month, we got about $3.5 million. And we're continuing our efforts with the government to release the currency for these outstandings. It's hard to predict. The country is going through a lot of challenges. But there are also some signals that things may improve because of the huge counter trade between India and Venezuela.
So while the revenue share of PSAI has declined, the capital employed in the business does remain high. I was just looking at those numbers. How do you see the overall ROC to improve in the coming years with low growth in PSAI segment?
So we should look at ROC at the company level because the PSAI business not only produces API for others, but also it's a huge lever for vertical integration for us. So at the company level, the ROC remains healthy.
You indicated that the next phase of growth will be driven by strengthening product portfolio and new launches. Give us clarity on these launches and how does the new product launch flow look like for FY17 or FY18? Are there big products there?
I can't give you specifics on the products, but the portfolio is building up nicely. We are quite pleased with the way we are able to crack some of the most difficult challenges that we had in our complex generics portfolio. And that is building up nicely for the US market.
How are you seeing traction in the US markets and how's it going? How do you see that segment growing given that there are competition concerns there? Also, you have already said that FY16 is to be, fairly light on approvals. So was Q1 US growth a one-off?
So, Q1 in some ways benefited from the launch of valganciclovir in the US, and that helped us in the numbers. This was launched in the Q4 of last year, but we got the full impact of that in Q1.
Also, Mr. Prasad, Pfizer is tying up with Synthon for Copazon. Does it imply stiffer competitive dynamics, hence economics for Copazon? And when can we expect your G-Copazon to hit the market?
So I think it will take us at least another year to get an approval for Copaxone. We have had a significant deficiency. We are responding to it, and we are hopeful that this will be a very significant value addition for Dr. Reddy's. The competition in this molecule will not be very intense.
CLSA says that monetization of a differentiated product pipeline remains a mid to long-term driver. Do you agree?
I agree with that. I think the first launch will happen in the next 12 to 18 months, but to really reach scale, it will take 3 to 4 years at least.
And Q1 results, extremely strong, margins of over 26%. Is this sustainable?
Sustainable depending on competition in the US market.
Okay, fair call. I guess this is all that we'll get from you. But thanks so much for joining in today and giving us that perspective as well.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.